Hello guys, so this is Mr. Ibrahimthetrader of Gova Trading Academy. So today I'm going to be showing you what happened today on GBPUSD using the candlestick chart and also using the Sierra chart platform. So on the candlestick chart, this is what we have on GBPUSD today. Okay, you can see on GBPUSD today, we saw this buy zone here. Price came back into the zone and you can see how price rallied up. But by using candlestick charts, you won't know how to confirm this zone, if that zone is going to work out or not. So but let us go and look how this trade work out using the candlestick using the Sierra chart platform. On the Sierra chart platform, you can see this is the footprint chart. You can see on this footprint chart, this footprint chart looks like the candlestick chart I just showed you on the candlestick chart, right? So you can see on the candlestick chart, we saw a rally in price. Price came back to the zone, then price rallied up again. Now let us look at the daily TPO charts. On the daily TPO chart, we can clearly see this area. So this is the area on the daily TPO chart. On the daily TPO chart, what can you see? You can see that we have our initial balance opening above the value area high. Initial balance open above the value area high. We all know what is going to happen when initial balance open above the value area high. So we saw buyers in control. After seeing the initial balance, we can see buyers in control in the market. Price came back to the zone. You can see how price came back to the zone here. Price referenced the value area high where there is volume. You can see there is volume here, high volume in this area. So price referenced that area, and then when price came back to that zone, you can see how price rallied up again. So in essence, the most important part of this Sierra chart is looking at the initial balance. The initial balance is going to help you to know who is in control in the market. If it is buyer, if buyers are in control in the market, all you have to do is wait for an opportunity to buy in a better price, in a good area. Because let's say, for example, we have our initial balance opening here and we can clearly see buyers in control. For example, you can see in this instant, buyers are in control. How are buyers in control? The first area here showed us buyers in control. This area, this movement in price. So as soon as I see that buyers are in control here, what you have to do is wait for price to come back into that zone again the second time, because this is a zone now, right? This is a demand zone. Whenever price come back into that zone again the second time, expect price to rally up again in that area. You understand? So again, using the initial balance usually tells us who is in control in the market. For example, if you can clearly see that buyers are in control in the market, are you going to be selling? You won't be selling. It doesn't make sense if you see that buyers are in control in the market and you are selling as a retail trader. If you see that buyers are in control, what you have to do is to buy immediately along with the big players. If you see that sellers are in control, you don't have to buy, because buying means you are going to be selling against the big players. So whenever you see the big players selling in the market, you should also be selling along with them. And how are you going to know if the big players are going to be buying or they are going to be selling? The answer is very simple. By looking at the initial balance, you can see this red line. This red line, the duty of this red line, which means the initial balance, it shows us who is in control in the market. Because As at the time of this analysis, when this area has not happened yet, remember, this is what we have. We can clearly see our initial balance. Initial balance showed us who is in control. In this area, who is in control here? You can clearly see that buyers are in control here. So it means that we should be waiting for price to come back to the zone again the second time. Then when price come back to the zone the second time, price is going to reference the value area high, and then price is going to rally up again from that same area. And that is exactly what happened. Now this is just one of the examples. Let me show you other examples on other profiles. Look at, here's another example. In this example here, we can clearly see that we have our initial balance here, the red line. It shows us who is in control in the market. You can clearly see that buyers are in control here, right? So price came back to the zone the second time. You can see how price came back to the zone this second time here, and price went up to buy. Let me show you another example. You can see here's another example. In this example, we can clearly see that we have our initial balance here. Immediately after having the initial balance, then we can clearly see who is in control in the market. Buyers are in control. You can see that buyers are in control here, right? Now, after seeing that buyers are in control, price came back to the same area again. Then you can see how price rallied up the second time. See how price rallied up the second time, right? So let me show you another example. Look at another example here. In this example here, we can clearly see that we have our initial balance opening above the value area high, because this is the value area low, this is the point of control, this is the value area high. Okay, so we can clearly see that initial balance open outside the value area high. Then we can clearly see buyers in control in this first area here. Then the second time price came back to the zone again. You can see this is the second time price came back to the zone. When price came back to the zone the second time, we can clearly see how price rallied up again the second time here, right? So it is very simple. All you have to do whenever you're analyzing this Sierra chart, from the initial balance using the daily TPO chart, you can see this is the daily TPO chart, 30 minutes, right? 30 minutes time frame. So on the daily TPO chart, all you have to do is open your 30 minutes chart, also open your 30 minutes candlestick chart, look for a massive rally in price from the initial balance, wait for price to come back to the same zone again the second time, and then you should be able to know what to do whenever price come back to the zone the second time. Okay, now let us go back to the main analysis. Going back to the main analysis, which is today, let us analyze the reason why price came back to the zone and rallied up, because we should be able to see how sellers were being trapped and buyers taking over in the area. When price came back to the zone this second time here, the time there is which time? Which time is this? So let us check the time. Look at the arrow below here. Let us look at the time together. Your focus should be in this area. Your focus should be in this circle here. Okay. Now let us check the time together. The time here is, you can see it is 10:30, right? 10:30, 11 o'clock. That is the time, 11 o'clock, 10:30. I believe you can see that. That's it below. Okay. So, and the zone here happened on the, this zone here happened 1:30 a.m. This zone here happened around 1 o'clock 1:30 a.m. Okay, this area here, this area happened 1 o'clock 1:30. This area here happened 10:30 11 a.m. today. Okay, so let us look at the same area on the footprint charts. Let us look at this same area on the footprint charts. First of all, let's go back to the candlestick chart again to see the context of the formation of the candlestick that we are analyzing. On the candlestick chart, we can clearly see that this is the formation we are trying to analyze. The formation we are analyzing is this area here, right? In this area, we can clearly see how price rallied up, price dropped down, price rallied up, like that. Can you see? So let us look at this same formation here. Let us look at it on the footprint chart. On the footprint chart, I believe you can see that the formation looks exactly the same thing as the candlestick chart, right? You can clearly see that the formation we have is a rally in price like this. Price came back to the zone, then we can clearly see a rally in price, right? Because remember, these two areas you are seeing here on the footprint chart, this is the same area on the candlestick chart. Look at that same area on the candlestick chart. Can you see? Can you see these wicks here? This wicks here is the same area you are seeing on the footprint chart. Okay. Now let's go back to the footprint chart again to see what is happening on this zone. When price came back to this zone, what happened? When price came back to the zone, we should be able to see a shift from a seller to being a buyer. Sellers were being absorbed and buyers are taking over. We should be able to see it with exact figure. Okay. Now on this my footprint chart, I was able to squeeze the chart. That is why you are seeing my chart like this on the footprint chart. Okay, but let me unsqueeze it so that we can see the figures. So right now I'm trying to unsqueeze the chart so that we should be able to see the figures of what happened on this area. Okay. Now you can see I'm opening the charts gradually. So this is the footprint chart. And this is the zone on the footprint chart. This is the zone. Now remember, this is when price came back to the zone here. This is when price came back to the zone the second time. Okay. Now let us see the reason why price came back to the zone the second time. What happened on the price? Because remember, the footprint does not lie, because the footprint is all about numbers, okay? And we all know that numbers don't lie, right? So when price came back to the zone the second time, we can clearly see this area. Let me open the footprint a little bit more. I think it is okay like this. So we can clearly see that when price came back to the zone, remember I told you about this blue line. Remember I told you this blue line is initial balance line, which means there's an imbalance in price in a demand zone. So when price came back to our demand zone this morning, we can clearly see, and the time here is also 10:30. Let me show you the time. You can see the zone here is, the time on this zone is also 10:30. So I believe you guys can see 10:40, 10:30 is the same thing, right? In the area. So when price came back to the zone, we can see how sellers are being exhausted. Look at it here. We can clearly see 49 sellers coming into a demand zone, 28 sellers coming into a demand zone, right? So, but if this 49 seller is really strong, then why is the candlestick here closing bullish? Why is the candlestick closing in a bullish way? If these 28 sellers are strong, why is the candlestick here closing in a bullish way? Okay, that tells us that the sellers in the zone are not strong at all. You understand? It means that there's a change from a seller to a buyer. You can see we have aggressive sellers coming into the zone. Aggressive sellers coming into our demand zone. You can see these aggressive sellers coming into our demand zone. But as soon as price hits the demand zone, then we saw buyers coming into the demand zone. You can see we saw buyers coming in gradually. This is the final confirmation that buyers have taken over in the market. These areas here are confirmations to us that buyers are in the market in our zone. You understand? Also, we can see how buyers took over in this area here. You can see 17 buyers came into the market with a momentum bullish candlestick, okay, into our demand zone. And this is enough confluence for you to be able to buy in the area, okay? This is enough confluence. Now let us look at the view up charts. On the view up chart, we can also see that this area here, on the view up chart, we can see that this area here is the area of 10:30, right? The time we're having here is 10:30. So we can clearly see that price came back into the zone in a flat view up, and then price rallied up, okay? Remember, on the view up chart, this is the first rally in price on the view up chart. Price came back to the zone on a flat view up area, then price rallied up. So these are enough confluence for us to buy in the market, okay? So, and that is the reason why this trade worked out today on GBPUSD. Very simple. And the risk on this zone is this is 6 pips risk. The reward here is 63 pips reward. So 63 divided by 6 is going to give us 63 divided by 6 equals 10.5. So canceling this out, we know that what we have left is 1:10 on this trade. This trade gave us 1:10. It's as simple as that. It means that using 1:10 to calculate this trade, if you risk $10 on this trade, it means that you made $100 on this trade. If you risk $50 on this trade, it means you made $500 on this trade, no matter how much you risk. So the point here is using Sierra chart to confirm your zones. You have more confluence, you have more confirmations for you to enter a buy trade or for you to enter a sell trade. And this is having enough wall tool. It is like fighting a gorilla, right? Whenever you want to fight a gorilla and you don't have the power as a human being, you don't have the strength that gorilla has. So what you have to do is look for an instrument, look for a tool that you can use to help you fight that gorilla, right? And that is how you can be able to fight a fair fight. But in the market, in the forex market, you guys are trading against the biggest people who are trading in the market, which are the big banks and institutions. And these people are here to crunch you down. You understand? So if you are not using the same tool that they are using in the market, you are going to keep losing money in the market. Because by using the candlestick chart, big banks in the first place, they don't usually use the candlestick charts. The chart they use is the volume profile charts, market profile charts, footprint charts, DOM, and the view up charts. These are the same charts the big banks usually use. You can never find candlestick charts on the big banks footprints on the big banks screen. You understand? So that is why you guys need to be using Sierra chart and you need to take it serious. Okay, so if you have any question, feel free to ask me privately. You can ask me your question on Instagram or Telegram. Okay, so this is Mr. Ibrahimthetrader of Global Trading Academy.